This is the Southside School of Financial Freedom Watch List and Market Report for the week ending March 13th, 2021. Our question this week is, what is an ETF? The answer will be provided later in the video. This week, the market ended up. The Dow Jones Industrial Average increased 0.9% on Friday and was up 4.07% for the week. The S&P 500 increased 0.1% on Friday and was up 2.64% for the week. The Nasdaq decreased 0.59% on Friday, but it was up 3.09% for the week. Looking at the week, we can see that there were 11 up finishes versus 4 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average was up, but the S&P 500 and the Nasdaq were down. On Tuesday and Thursday, all the major indexes were up. On Wednesday and Friday, the Dow Jones Industrial Average and the S&P 500 were up, but the Nasdaq finished down. Notice that the Dow Jones Industrial Average finished higher every day this past week, while the Nasdaq finished down 3 out of the 5 days of the week. This is seen by many as a rotation out of tech stocks and into industrial stocks. Will the rotation trend continue, or will tech stocks make a comeback? The new unemployment claims were 712,000 versus 725,000 expected. Continuing unemployment claims were 4.1 million. U.S. consumer prices rose 0.4% in February as expected. The U.S. 10-year yield, Treasury yield, stayed above 1.5%. The House passed the Senate-approved $1.9 trillion stimulus bill, and the President signed the bill into law. And on Friday, the U.S. 10-year Treasury yield jumped to its highest level in a year, over 1.6%. New unemployment claims, continuing claims, U.S. consumer prices, the 10-year Treasury yield, the stimulus bill passing Congress, the President signing the bill into law, and the U.S. 10-year Treasury yield hitting a 52-week high are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and the Congress. These 5 entities will do what they must to drive the market higher. Notice how the market rose once it was reported that the President signed the stimulus bill into law. Now we are at our question of the week. What is an ETF? An ETF, or an exchange-traded fund, is similar to a mutual fund in that a company pools money together from different investors and buys various stocks and or other financial assets for those investors. However, an ETF can be traded like a stock. That is, you can buy it 1 minute and then turn around and sell it a minute later. You cannot buy and sell mutual funds that fast. You can also buy and sell option contracts on ETFs. You cannot buy and sell option contracts on mutual funds. Do you own an ETF? Do you own any shares of a mutual fund? Do you own any stocks at all? If not, why not? Are you afraid that the market may fall again? After all, the market did fall for 2 weeks in a row, but it did rebound this week. What will it do next week? I don't know. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I applied the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my watch list for the week ending March 13th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Afria Incorporated, ticker symbol APHA. It is in the third column. It increased 27.31% for the week, and it was up 0.7% on Friday. Afria has topped my trading list several times in the past couple of months. Afria is a marijuana company that cultivates, produces, markets, distributes, and sells medical cannabis in Canada and internationally. Looking at a summary of results, you can see that Afria has increased more than 189% so far in 2021. I traded Afria this week, and I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index, ETF, SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is outperforming the S&P 500 index, ETF, SPY. The Southside portfolio is up 16.31% versus 5.4% for SPY, a difference of 10.91%. The Southside is beating SPY by 10.91%. This week, equities, including puts, calls, and ETFs, make up 54.25% of the portfolio. Cash is 45.75%. The cash flow generated for this week was 2.08% of the portfolio account value. The account value changed by 7.04%. Meanwhile, the S&P 500 ETF SPY changed by 2.72%. I sold option contracts on 5 positions this week, 3 calls and 2 puts. That ranged from $368.72 to $928.01. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street, by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.